Okay, this first lesson is going to be on income tax, otherwise known in Ireland as PAYE. And it's the tax that we all have to pay from our income, unfortunately. It's what runs the country, it's what pays for the hospitals and the schools and the street lights and the Gardaí and all that. So it's the main tax that people pay out of their income. And to do this topic, I chose a Leave Insert question that came up. I think it was last year, it could have been the year before. An ordinary level Leave Insert question. And it's about a girl called Emer. And Emer has a gross wage of 40,000. Now the first phrase that stands out there is gross wage. What that means is, that's the money she earns each year before any taxes or any charges or any other things are taken from it. So in an ideal world, she'll get to keep the entire 40,000. But of course, that's not how the world works. Some money is going to be lost from that. But before all that, that's what she earns. Okay? Per annum means per year. It's just in Latin. And she earns that with company A. So they don't give the name of the company for privacy reasons. That's fine. So the first thing there is gross wage. Gross is the money you earn before taxes are taken. Okay? Now let's dive a little bit deeper into how much money she's going to have at the end of all of this. She pays income tax. Everybody has to pay income tax. And she pays income tax at a rate of 20% on income up to the standard rate cut-off point. I'll explain that in a moment. And the standard rate cut-off point is 35,300. We'll come to that in a minute. And then she pays tax at a rate of 40% on the remainder. Okay? So there's two rates of tax going on here. There's a 20% rate and there's a 40% rate. There's also something else to be careful about. She has tax credits. And I'll explain those in a moment. And she has tax credits of 1,650. And the question you have to answer is find out how much income tax she pays per annum. Right, the best way to do these questions, all financial maths questions, is to visualize Emer's money, her income. Visualize it as though if she piled up all the money on the table, she stacked up, she put it all in 50 euro notes and she stacked up the 50 euro notes on the table at the end of the year before any taxes were taken out of it. It would be a big pile of money. Now, we'd all love to have that big pile of money right now, but we don't. But anyway. Now, in this big pile of money, up to a certain point that we call the standard rate cut-off point. Now, we saw in our question the standard rate cut-off point was 35,300. So we're going to fill that in here, 35,300. So from nothing up to 35,300, all this income here, she is going to pay the standard rate of tax on that. Now the standard rate of tax is 20%. So she is going to pay 20% of that money. Now let's highlight that blue, that colour, same colour there. That's how much money she's going to pay 20% on. So how much money is that I've just highlighted? How much is that? Well, it's 35,300. So she has to pay 20% tax on that. Okay? So we say 35,300 multiplied by 20%. And from that you would get 7,600. So she can kiss that goodbye. That's going to the government. Okay? That's how much tax she's paying on that part of her income. Now, the rest of her income, she earns more than 35,300. She has a gross, remember, of 40,000. So let's fill in the gross up here, 40,000. That's how much her gross income is, okay? On this part of her income here, she's going to pay the higher rate of tax on. That's 40%. So she's going to have to lose 40% of this part of her income. Okay? Now, how much is this part? How much money are we talking about here? It's not 40,000. 40,000 is all of it. And we're not talking about taxing all of it at 40%. That would be very unfair, because we've already taxed this bit of it. She's already paid tax on that part of her income. She's lost 20% of it already. We're just talking about this purple part. That's how much we have to tax at 40%. So let's work this out for a second. Zoom in here. What we have to do to find out how much money we're talking about here, first of all, is we have to get our gross, which is 40,000. Let's do it over here for a moment. And we have to take away the part that's already been taxed. Now, the part that's already been taxed is this bit down here. She's already paid tax on 35,300. So let's get rid of that first. 35,300. Let's take that away. You're left with 4,700. That's how much money is in this purple part. And it's how much money she has not paid any tax on yet. So we have to tax it. Now this is being taxed at the higher rate, the 40%. So we've got to multiply this by 40%. And when you do that, you get 1,880. Okay? So that's the income tax she has to pay on her earnings each year. 20% of this much up to the standard rate cutoff point. But any money more, any money she earns above the standard rate cutoff point, that purple bit. No, sorry about that. I answered a phone call there. So there are her two tax amounts that she's going to have to pay. She's going to lose 1,880 from this part of her income, and she's going to lose 7,600 from this part of her income. So in total, because we're going to have to add these two numbers together, in total, her tax is going to be 7,600 plus 1,880 is 4 is 1 is 9 is 9,480. Okay, 9,480. That's how much tax. That's what's called her gross tax. Now, there's good news though, because she's not going to have to pay all of that. Because she has this thing, and you see in the question, she has these things called tax credits. Now, it might be necessary at this moment in time just to give a little bit of an explanation as to what tax credits are. Tax credits are amounts of money that the government take away from your tax bill to reward you for working. Let me explain. If you're a lone parent and you still work, the government want to reward you for that, because you've every choice not to work and instead maybe draw the social welfare, which would cost them more money in the long run. So in order for them to encourage you to stay working, you pay less tax. You get an extra tax credit. Or how's about if you have a child with special needs? You know, that costs more money than having children without special needs. So you might be given a tax credit for that. Let's say you've got private health insurance. That saves the government some money. So they might give you a tax credit for that. So tax credits are things that the government give you to help you lower your tax bill, so that you don't have to pay as much tax as everybody else. And it's a way of rewarding people to stay and work. So her tax credits are 1,650. So what you do is, this tax bill here, you're going to lower that by 1,650. You're going to subtract the tax credits from your gross tax. And when you do that, you'll end up with, that leaves it 8 and give it 1 is 8, and 8 is 7. 7,830. Now that's how much tax you're going to have to give the government. So that figure is better than this figure, because it means you're losing less. You're only losing 7,830 as opposed to 9,480. So the question, remember, asked, this was the Leaving Cert question a couple of years ago, find out how much income tax she pays. Well, we've done that, 7,830. If they asked us to find out how much her net income would be, how much money she actually brings home every year, we just have to do one last step. We get our gross, this is how much money she earns before taxes are taken away, and we take away that tax bill from it, because you're going to lose that, 7,830. Okay? It leaves 32,170, and that would be the actual money she gets to keep. That's called her net income. Now, we weren't asked for that in this question, but that's not the point. Now, I'm going to show you another question and see if you can try and do it. This was a question that came up in the Leaving Cert a couple of years ago, and it's the same as the one that we just did. So it's about Fiona this time, and she earns a gross wage, there's that number again, of 1,550 every fortnight. So they're giving us her fortnightly gross wage instead of her yearly gross wage, but it's the same method. We put in 1,550 up here. She's piled up her fortnightly earnings on the table. Here it is, up and down the left here, this, all the money. And it comes to 1,550. Okay. She pays income tax, a universal social charge, and pay-related social insurance. We're not worrying about the USC and PRSI in this video. We're only focusing on the income tax part. Each fortnight, Fiona pays income tax at the rate of 20%. Okay, so the standard rate is 20% on the first 1,300. So on the first 1,300, she's going to pay 20%. Okay, so 1,300 is effectively her standard rate cutoff point. And she pays 40% on the remainder. So the 40% is the higher tax rate. Okay, and it's normally around those two figures. She has tax credits of 126 per fortnight, so we might as well write that in now, 126. And they want to find how much income tax does she pay per fortnight. So you, in a moment, pause this video and work out how much she's going to pay on this part of her income, which is 1,300, by the way, 1,300, how much is 20% of that? And how much tax is she going to pay on this much of her income, which is how much? Here's the trick. How do you get this purple part? Remember, the gross, this bit, take away the standard rate cut off point. Okay, remember the standard rate cutoff point is here. That'll give you how much money we're talking about here, and then find what 40% of that is. Add your two numbers together to get the gross tax, take away the tax credits, and see what's left. So pause the video now and try it. Okay, hopefully you tried that, because I'm going to continue on as though you did. The first thing I did was worked out what's 20% of this part, from 0 to 1,300. So I got 1,300 and I multiplied by 20%. That gives me 260. Then I want to find out how much tax she pays on this part of her income. How much is this part of her income? It's her gross minus the standard rate cutoff point. It's 250. So I want to find out what 40% of 250 is. It's 100. So in total, her gross tax is going to be 260 plus 100 is 360. But she's got some tax credits, so I took those away, and there is her final income tax bill.